welcome to Cigars and Syndication. I'm Robbie. I'm here with Jay today, where we're passionate about real estate and passionate about cigars. Today we're smoking a Tatawahe Kajonu. Jay, what do you think about it?
Uh, this is a pretty good smoke. By the way, I'm Junaid Noor, and welcome to Cigars and Syndications. So this is the gold label. We smoked the white label. Have we smoked the white
The
label?
black label we smoked last time.
We smoked the black label, and there's a white label too. Did we smoke that one? I think we did.
I think we smoked that one, but it wasn't on an episode.
It wasn't on an episode, so we'll have to put one on an episode. This is a really good smoke. This is a 2012 Kajuna, is the gold label, and as we get through the episode, we'll kind of give our stance on it.
Well, today we're going to talk a little bit about affordable housing and whether that's a good investment that fits in your portfolio.
So affordable housing falls into a few different categories. A lot of people think that affordable housing is just Section 8. But affordable housing also, HUD has a AML, which is the average market rent or average market income, AMI, average market income number. And affordable housing is basically, if you make, and it changes by zip code, right? So if you make within, 50% or within 80% of that affordable, with that income level, then the rent levels are, you're able to afford those rent levels if you fall within that income bracket.
Right. So they can come in and you can have an affordable housing and it not be classified as Section 8 just by meeting some of their requirements. I know that they have some square footage requirements and they have some other things that dictate it. And you can't necessarily segregate the unit. It has to be, spread out throughout the community. Just that they have the same opportunity as everybody else.
Right. So you can't, with affordable housing, let's say you have 5 buildings, or let's say you have 4 buildings, you can't say these two are for affordable housing and these two are for regular housing. If the affordable housing requirement is, for example, one of the requirements is that 50% of your units have to fall, their rent has to be within 80% of the AMI, the average market income. So it has to be 80%, it has to be 50% of each building. It cannot just be, 50% of one building.
Well, for the developers, I mean, there's usually an incentive for them to want to go towards affordable housing program. Either it would be a HUD loan or some other instruments, even tax breaks and things like that. You can give us some more specific examples of some of the tax breaks I've heard you talk about.
Yeah, so one of the tax breaks that you can get in affordable housing, if you're doing a larger development, it's called a PFC. It's a public funding corporation in which basically you form a partnership with the local jurisdiction, whether it's a city or a county, and they waive your property taxes for a period of time in return for you providing the affordable housing. And remember, the whole idea of affordable housing, it all flows down from the HUD, right? The Housing and Urban Development, and it's basically to help people with certain income levels so they can still afford housing. It's just as the term says. But that's one of the things. And the other one is Section 8 property. Do you know? Have you ever had a Section 8 property?
I have not had a Section 8 property. I know several of associates that have been into that market and actually enjoyed it and thought it was a good investment.
Yeah, so I had rental houses before a few years back, and one of the houses was a Section 8 property. And I'll tell you, I was very hesitant because you hear all these horror stories about tenants moving in and destroying the house, and it was actually not a bad deal at all. My Section 8 house went through the city of Houston, um, and they basically, they pay the rent right on the first of the month every month, depending on the zip code. They determine the market rent, which in my case was actually higher than the rent I was getting from a tenant. The rent is their steady payments every month, whether the person has a job or doesn't have a job. Anything happens to the economy, Houston Housing is paying that rent through the Section 8 voucher every month. And they did actually they did a very good job. And I think that the horror stories are something of the past. Uh, but now what they do is they come in, they inspect the house, they make sure that everything is in working order, and if there are any issues, you let the housing inspector for your area know. They come in, they check it, and they can actually, revoke the housing voucher of the tenant who lives in it. And that's the one thing the tenant doesn't want, is the housing voucher revoked, because then they won't be able to afford that rent. So now they've put this incentive, or punishment in the system where the tenants don't really destroy the houses anymore.
Yeah, no, I do. I've heard those stories, and I've heard a lot of success stories in that market as well. So again, I think, unfortunately, it's business, and sometimes you can get in a bad situation. But as long as Houston Housing Authority and or your local, authority takes care of it, and you follow those procedures, it probably can help you get that taken care of pretty quickly.
So some of I mean, I have a friend of mine who has maybe 25, 30 homes, and that's all he'll do is Section 8, because, the rent is guaranteed and there is no chasing people down. There is nothing. First of the month, that rent gets deposited into your account, no questions asked. Um, I do have some tips as to, how to choose that investment property. Um, I wouldn't choose very high end rents, very high end properties where there's a lot of nice finishes, only because the HUD program is not going to give you that kind of rent. They'll give you whatever they determine is good for that zip code. So there's no point trying to do, something out of something exorbitant where you are not going to get your money back.
So you have the um, the Section 8, but HUD also will give you some concessions and give you fixed term rates on your loans and things like that. What are they looking for in compliance?
So most of the HUD loans, and again, they have various different loans, right? They have Section 8 housing loans, they have low income housing loans, but even a regular HUD loan, um, right now, or even when interest rates are lower, offers better terms than most other loans, definitely from a bank. Our bank loans right now for commercial property are maybe 9.5, where HUD is probably at about 6. But however, HUD requires that, if you get one of their loans and you hold it for 10 years, it's a long term. They want you to hold it for a long term because they want to make sure that, you're not just in there flipping houses or flipping properties, or, flipping multifamily, that you're in there for the long run, because they're investors. HUD has investors who are in it for the long run. And then HUD wants to make sure that you have, apartments, and you're managing those apartments well for the long run.
Another thing that's popping up a lot is the opportunity zone. They've come in and they've identified zip codes in certain areas where they're going to give you other incentives to invest in affordable housing.
Yeah, the opportunity zone is a very interesting law that was just passed, recently under Donald Trump, when they did the new tax laws. Two of them were put into place that were very, very good for real estate and real estate developers. You wonder why? Why real estate, right? One is the accelerated depreciation, and the other is the opportunity zone. And the whole thing with the opportunity zone is that they identify certain areas where, if you do a development or if you purchase an asset in that area, in order to, it's a depressed area, and they want to try and get investment into that area. Um, it gives you some great tax benefits.
I know here in Houston, there's some areas that have benefited from it, and even the local, the city of Houston and other entities have funneled money into these opportunity zones because developers and investors are interested in it, and they have the opportunity to even invest tax free in instruments that otherwise weren't tax free.
Yeah, the big thing with the opportunity zone is something similar to the 1031 exchange. So when you do a 1031 exchange, you can sell one property and purchase another property and defer those taxes. In opportunity zone, you can have gains from the sale of a business and you could put it into an opportunity zone investment and defer those taxes, whereas in a normal 1031 you couldn't do that.
Well, I think the investing in affordable housing, it's just kind of goes back with our philosophy and investing in anything. Do your due diligence, see what kind of returns you're going to get, and know your partners, and then and hopefully you can have a successful venture into affordable housing.
Yeah, one of the things I like to do, especially when I get into something new, and if you've been investing in regular single family homes, flipping them or renting them out, affordable housing is a little bit of a different animal. So maybe partner up with somebody who's done a lot of these. Just because there's always pitfalls, there's always ins and outs of the laws and the regulations, and you just need to know those.
Well, you need to know Tatawahe Kajuno Gold Series, Gold Label. It's 2012. This is a really good, really smooth smoke.
It is very good. It's very strong, but it's smoking really, really well.
Well, jump on albanyparkcapital.com, read our articles, leave us questions and comments, and keep investing.
Have a good day.